My guest today is Jason Plett. Jason is the CFO at FlexKeeper. Jason was the CFO at Dedicated IT. I wanted to say a little MSP in Florida, but they're not a little MSP. Jason, how big are those guys?
Yeah. So when I left, they were actually cresting 15 million of top line revenue. Now, I believe they're about 25 plus. So they are certainly continuing to grow.
Yeah, so Jason definitely has experience being a CFO for an MSP. So we're gonna talk about some cool stuff today. If you have questions, feel free to use the Q&A section for those. You can use the chat, but the Q&A is where I'll look for questions first. So Jason, you're gonna tell us all the secrets to improving our bottom line, right?
Well, I hope so. I don't know that I have any magic formulas. I have a lot of probably homework for most of our MSP owners after they go away from this webinar. Hopefully they'll have some things to think about and things that they're going to challenge themselves or their finance team with, and we'll go from there.
Awesome. Well, hey, feel free to share your screen, sir, and dive right in. And I'll help you keep it moving wherever I can.
All right. Well, let's kick this off. We are located in South Florida, so we have a little beach scene for you guys that are up in the cold to make you a little jealous about what we're doing here.
It's work.
Uh, so let's talk. I'm not going to talk a lot about myself, but I do want to give a little background. I know Steve did a good job in his intros of who I am and where I've been. I do have a most extensive real estate background, having worked in real estate for 20 plus years out of college. So that's where most of my expertise lies. However, during my time as a real estate professional, I also earned my CPA license, and I have a small tax practice here in South Florida. And out of that came Dedicated IT, who was my biggest tax client at the time, and they hired me to be their CFO and tax guru. And so I started in 2019 with them. In 2023, I joined the FlexKeeper, which is my wife's company, and it's a small boutique accounting and tax business. And so I've been doing that for the last couple of years. And on the side, I do coaching monthly with high-level finance professionals at various MSPs for Tailored Business Group. So a lot of the stuff that we're going to talk about today, I talk about on a monthly basis with my CFOs in the MSP space. So that again, none of the stuff that we're going to talk about is necessarily anything that I've come up with. It's simply things that I've gleaned through my experience and knowledge in working with the MSP industry. So the first thing we're going to talk about here is what are best in class margins. I'm actually going to start here and go backwards a bit. So the first thing is that most people ask me like, well, why are margins that important? Isn't it just about, making money, the bottom line? And of course I say, yes, that's great. But how do you know if you're actually doing well? And you can look at specific pieces of your P&L and make sure that there's areas of your business that are broke. So that's why margins are important. And this is really like a very MSP specific thing. So when I was in real estate, we didn't care about margins. We had basically, you have a finite piece of real estate with finite space, and you figure out how much you need to charge for that space to actually make money. Obviously, the MSP industry is significantly different in that if you really want to scale, you have an infinite possibility of scaling. It's simply um, how do you scale effectively? Now, I do want to mention that when I'm talking about margins, I am specifically gearing this talk to people that have a CRM where, something like ConnectWise or AutoTask or Halo. Steve, I heard Halo is like a big thing. Is this like a new up and coming player in the MSP space?
Yeah, so the nice thing about Halo, they've been around for a few years. They started in the UK, I believe, or at least in Europe, I should say. Um, and they've been making their way this direction because they are independent. They're not owned by Kaseya or ConnectWise or by a major stake by a private equity firm or anything like that. So they're independent, and that's what MSPs love about them. Um, and I would not say it's the prettiest platform, um, but it gets the job done, and it's very customizable and flexible.
Yeah. So I've been hearing actually a lot about Halo, but I'm specifically talking to you if you have you have the CRM and then you have an ERP. So obviously the most recognizable and used ERP is QuickBooks. Most everybody uses QuickBooks out there, but you need to have some type of accounting uh, platform in place. I say this not because I want to have naturally, Jason, that's kind of like very rudimentary, because you'd be surprised at how many MSPs I run across that their accounting platform is a fancy version of Google Sheets. So while I'm not discounting the functionality of Google Sheets, I am saying that when you're a small MSP starting out, you need to put into place an accounting software. Is QuickBooks the one for you? That remains to be seen. I mean, most of the industry uses QuickBooks. That may not be what works for you, but I certainly want to stress that it's important that today's talk is focusing on those two major things already being in place for you so that you have a way to organize your financial data. Um, Another question that I get a lot is how do these margins, relate to KPIs? Obviously, you can use the margins to create your KPIs, but this is, margins to me are really more of a finance specific tool. Like KPI, you want to use KPIs in your business to obviously measure performance and productivity, but they are not necessarily important as important in the finance side of things, because what we're really wanting to drill into is your actual MSP metrics. Now, the last thing I want to talk about is, do other industries like really care about margins? And the answer is yes and no. The interesting thing for me is that when I deal with I have approximately 200 small business clients, and I've actually taken this MFP model of how they are modeling margins and looking at their financial statements into other areas of business to help my other small business clients really focus hard on their finances and not just the bottom line. I know. Steve, I don't know if you're one of those owners, but I know you mentioned to me about running an MSP. I know at Dedicated, I would provide the owners a P&L report, and they would kind of like look at, oh, how much is my top line revenue? And then they would skip all of the important things all the way down to net income and be like, oh, well, that looks good or that doesn't look good. Does that seem to relate, Steve? Or
Yeah, well, yeah, it's weird. You called all that stuff in the middle important things. I don't understand why, but so I would look at a few things. I'm a data nerd, so I did like to run like a comparison P&L so I could compare one time frame, like let's call it year to date, with last year to date. So that way I could see, how am I doing on my advertising spending versus last year? that kind of thing. However, what I didn't know how to do was take that data and turn it into knowledge. Like I could tell you what my monthly profitability was. I could have told you what my margin was, but I couldn't tell you, like, how do I forecast, 6 months down the road, 12 months down the road, whatever. And how do I uh how do I do, I don't know, cash flow optimization or resource allocation optimization. Like, I couldn't do any of that kind of stuff, but boy, did I sure love looking at those numbers.
Well, that's actually that is an excellent answer. I like doing those things too. Definitely like year over year comparison, but you're right. When you want to go to forecast and do and look at, well, how much, if I want to grow my revenue X amount in the next year, what are the trailing expenses that come along with it, which is a very good point. So that's an excellent jumping off point. So here I'm preparing again, I'm giving you all the answers right here at the start of the test. So definitely this is exactly what we're looking at for what are best in class margins. Okay. So when I talk about best in class margins, I'm talking about a striation of MSPs that are doing things the absolute right way. They've got all their processes honed down. They've got everything, working as they want it to. And so using these best in class margins, we in the MSP community can compare ourselves to the optimal company. And again, none of this stuff that I'm sharing with you is proprietary or anything that I made up. This is from years spent in peer groups, first in the Evolve ecosystem, which some of you may or may not be familiar with, and most recently in the Taylor Business Group ecosystem where I'm coaching. So we talk a lot about this. Just running straight down. NOI needs to be above 12%. If, as an accountant, I can tell you that there's a lot of things that are draining your cash that don't necessarily hit your profit and loss statement. So your NOI needs to be at 12% to actually make sure that you are having positive cash flow. And of
That's
course,
NOI.
net operating income. Very, very, that's the bottom line. That's what most people or most owners, when they look at a profit and loss statement, that's really the only number they seem to care about. Even though, as I mentioned, there's a lot of numbers in between revenue and getting to that net operating income.
Yeah.
Service. So our service gross margin, these are the guys sitting on your desk, needs to be above 48%. Your gross margin, which is a mix of your project team and your service delivery team, needs to be above 40%. Your product margin needs to be, your product margin, profit margin should be above 30%. The product margin is actually the easiest thing to discuss and figure out, because if you buy a laptop or a server for your client, you should be marking it up 30%. Now, of
That
course, I
seems like
hear,
really high though.
yeah, I hear a lot of MSPs that are like, oh, well, there's no way that I can sell my clients a laptop for, a 30% markup, because they're going on Amazon and they're like, well, why? I can buy that same laptop for $800 and you want to charge me $1,300. So the thing about it is that we have to do a better job in our MSPs of making sure that the client knows the value that that you're imputing onto this, that you're going to spec them the right server, that you're going to spec them the right laptop that is suitable for their environment. And with doing that special knowledge or having that knowledge, that you're able to mark up your products that great, because they can go onto Amazon and maybe buy a laptop for significantly cheaper than what you're going to sell it to them for, but it shows up in their office and it doesn't work. And then, Steve, who's left with the problem when the laptop they ordered off Amazon doesn't, you know, perform in their environment?
Yeah, they're still going to make it my problem.
Exactly. So what we need to do is we need to be able to say, you're not going to have these problems. Yes, you're going to pay a premium, but this is what we're looking for. Our sales margins need to be about 5 to 12%. Our sales spend, again, this seems like a crazy number to me. But this, the optimal MSP, they're spending anywhere between $2.50 and $4 to get a new logo. And the crazy thing is I was in a coaching meeting on Tuesday with my MSP finance team. And I asked the team, okay, your MSP, where is your sales margins? And,
And
I have, yeah, go ahead, Steve.
So can you explain what is a sales margin then?
So this is what your spend is in your sales and marketing department. So in other words, when I say 5 to 12%, I'm saying of your total revenue, let's say you're making $100,000, you should be spending about $5,000 in advertising, $5,000 to $12,000 in advertising a year to bring in new logos.
So Chris, it sounds like what he's saying is your expenses should be 5 to 12% of your total revenue for generating sales.
Correct. And when I was in my sales meeting on Tuesday, I have a very, big mix. I have some small MSPs. I have some big MSPs, and my bigger MSPs obviously had this down. So my bigger MSP was generating their sales spend was about 5% of their total revenue, and they were converting new logos using that spend. But we're going to get into the sales spend a little bit deeper in a minute, and we can talk about kind of what the controller or what the CFO told me about how they revamped their sales, their whole sales department to make sure that they were in line with these margins. Our admin margin, which is basically your overhead margin, should be less than 20%. A lot of people, and again, I'm talking about 20% is of your top line revenue. So your admin margin should be less than 20. And the reason for this is really just a math equation. If you're not selling your products at 30%, and let's say your margin markup is only 25% on a product, and let's say your admin cost is 20%. So theoretically, if you just do the very, very simple math, and I know we're a Thursday afternoon and nobody wants to do, any type of complex math at this point, but you've already, if you're only at a 25% margin and you're spending 20% in your admin costs, you're theoretically only making 5% profit, which, so if we can jack our admin down, if we can move our admin down, then we're going to talk about some of the real big admin spends in MSP space, and we can increase our profit margin. We obviously can increase our NOI into that target area that we're talking about. Yes.
So one thing that I'm thinking about while we look at this, with that sales spend. So basically what this is saying is it should cost you 2.5 to 4 months worth of a new client's revenue. So $1 of MRR equals $2.50 to $4 in spend, right? So 2.5 to 4 months of their revenue is what a best in class MSP is spending on sales and advertising. Um, if hopefully that makes sense. So it should be 5 to 12% of your uh, overall operating budget should be sales and advertising, and you should be able to bring in a dollar of MRR for every 250 to $4 spent. So um, if you're sitting here going, man, I haven't gotten a new client in 6 months or in a year or in 2 years or whatever, right? Look at your numbers. You can easily see, all right, how much of my revenue is going towards my sales margin? And if the answer to that is like 0%, well, obviously you're not getting any new clients if you're not spending any money. Now, let's say you're spending 15%, but you haven't brought in any new clients in 6 or 7 months. Um, Now you know that your sales spend is really high. So you should be able to look at these numbers and figure out, all right, uh, where am I spending the most on my sales spend, and where can I stop spending and start moving that money somewhere else? Or maybe you've got one source that works really well and another source that sucks. Well, take the money from the source that sucks and put that money into the source that's doing well, because spending more, hypothetically, into the good source should bring more clients. Would you agree with that logic, financially speaking, at least, Jason?
Yeah, absolutely. So sales is actually the biggest thing that I get a lot of questions on, because sales is a very, very tricky area. Um, and I don't want to. Maybe we should jump ahead to talk about the sales. I don't know if I'm actually very, very hyped about the sales knowledge that I've actually gleaned this week. So I think that's what I'm going to do, because I think some of these other things are just kind of, oh yeah, we know that, and and that. But let's jump ahead to sales. So, and I can, that's actually the second thing on my list, anyways. So here is here is the four major questions that I field on when I talk with my MSP clients. This is the four things that they really want to know about. The first thing is, how do I budget sales? That is the number one question that I get asked all the time. Like, what should I? So using the backing into it, if you will, and I know that my smaller MSPs, they don't have as sophisticated a sales engine. Sometimes it's the CEO doing sales. Sometimes it's a junior sales guy along with the CEO. So I know that you're probably not going to hit best in class numbers when you're doing that. So when you go to budget sales, you should figure out, okay, what do I want to grow? Do I want to add $100,000 of new MRR this next year? And so from there, I just take that 100,000 and I advise them, okay, you're probably not going to be at a $4 spend for a new logo. So you probably should budget, anywhere between $7.50 and $10 a spend. So if that's the case, then you back into that number. So that's the basis of where I advise my clients to budget their sales. Now, to me, that's not the hardest thing about the sales department or sales margins at all. I actually pitched this question to my group of CFOs, and Steve, I'm going to pitch it to you. And that is, I really believe the hardest thing about sales is actually lead times. So say you're a $10 million MSP, Steve. How long do you think a normal $10 million MSP who's got a pretty sophisticated sales pipeline takes to close a new logo?
way longer than it would in any other industry.
That's a very evasive answer, but I'm looking for an
Six,
actual. You
six
gotta
months.
throw a dart at it. Okay, 6
6 months.
months. All right. So you should. I wish you could just like do a poll on the fly. Like, is Steve over or under on 6 months?
Feel free to put your answer in the chat. I would love to know if you think I'm over or under. Does it take longer than 6 months from the time you start engaging with a prospect to finally close them? I was able to do most closes in about 20 days.
Well, I need to. Are you looking for a job in the sales department? Because I maybe need to hire you at FlexKeeper.
No, because I didn't close that many. It was just they either knew they wanted to work with me or they didn't really quickly.
Well, all I know is that when I joined Dedicated, I thought a good lead time was about 3 months. So I was budgeting based on a 3-month lead time. So I thought if I spent, $1 or I spent $5, in month one, that in 3 months I would see a ROI on that dollar. As you can imagine, I was smacked out of my mind. Sales lead times are a very tricky process, but again, I did a poll of my MSP CFOs, and they told me that the average lead time for a new logo is 9 to 12 months. So
you know what? The interesting thing that I'm hearing here, Jason, is, when we MSPs, not the CFOs, right? The actual nerds, the computer nerds, when we think about how long does it take to close, we think about from the time we first sit down with them for a prospect meeting to the time that they signed the contract. But you're talking about from the time we first started investing money into this market, whatever it was, right? So you're saying, we joined the Chamber of Commerce January 1st, and we started going to the luncheons, and they charged $35 for the luncheon. So here's that money, and we sponsored a table, and here's that money. And then, 9 to 12 months later, you finally close your first client who met you and started following you through the Chamber of Commerce. That's what you're talking about.
yes, and you've hit the nail on the head. And here's a little secret. If you are a small MSP or even a medium MSP and you're struggling with sales, the best thing to do is start to crunch numbers on figuring out what your lead time is. Because I know, Steve, you talked kind of in the opening about forecasting cash.
Mhm.
Well, if you think about your $500,000 MSP, right? So I'm sitting here telling you that you need to spend $50,000 in your sales department in a year. That $50,000, if your lead time is 9 to 12 months, which in a big MSP and a best-in-class MSP it is, that's a big outlay of cash before you even see $1 of revenue. So it is so vital. And that's why I'm surprised about how kind of cavalier people are about tracking their lead times on sales close, because theoretically you can have $150,000 to $200,000 out there before you even close a deal. So balancing that sales spend and making sure that you're allocating enough cash for it, and knowing that, my return on this investment could be a year out. Understanding that it is probably the most crucial thing that I would advise anybody if they were asking me about what their sales process how to refine their sales process, how to be better at their sales process. Again, I'm not a sales guy. I'm a by the numbers guy. So these type of things are, and these type of things are very real case scenario. Like I can tell you, okay, best in class companies are signing new logos, at $4, $2.50, $3. That means that really literally doesn't mean anything. What is the most crucial part about it is how much cash you have to outlay to actually get that, see a return on it. So
Mhm.
if there's anything that anybody takes away from this webinar, talking specifically about sales, it's that. It's definitely tone down, crunch your lead times, figure out, trace your revenue to wherever you first spent that first dollar, and you're going to be ahead of the game.
Yeah.
Because we can talk about putting in junior hunters that are making 100 calls a day, and and all all of the sales strategies that everybody talks about. Oh, we have a business development guy, and he's out there knocking on doors and stuff like that. That's all great. But understand that that business development manager that you hired, that you're paying $100,000 a year to, he's probably not. You hire him today, he's probably doesn't sign his first big deal until 9 or 12 months down the road. And you're going, dude, what are you doing? You need to go out and knock on more doors. But
Mhm.
you don't understand the investment that you're making. Does that make
And
sense?
yeah, it does. And something else I'm thinking about here is, if you think about the $500,000 MSP that you just mentioned earlier, and I know that's a small MSP. I don't know how it compares to yours, guys. I know you answered the question, but I just don't remember the answer. Um, oh, here it is. Yeah. So we've got quite a few who are 1 to 2 million. So let's talk about that. Let's say you're a $2 million MSP. A best in class MSP doing $2 million is spending around $200,000 a year on sales and marketing efforts. So that means they've got a marketing person on staff, they've got 1 or 2 sales guys on staff, and they've invested in local things like chambers of commerce and maybe conferences that are related to the vertical market you have kind of niched yourself into, so on and so forth. All of those things are things that your company should be doing with that money. And I would say, if you're a $500,000 MSP and you're wondering what should I spend this $50,000 a year on, because I feel like I should hire a guy. So do I hire a sales guy or a marketing guy? I don't know what your opinion is, Jason, but mine, I would say go with a marketing guy, because I can go out and sell. I don't want to, but I can. And I would much rather go, I'd feel more confident going out and selling with like some marketing collateral that doesn't look like a 6-year-old did it with crayon, because that's the equivalent to what us CEOs can do. We're typically not creatives.
Yeah, I mean, I don't specifically have an opinion to which guy is the most important, but I think you hit the nail on the head. Like you want to, if you're a CEO and you are actually good at closing deals, then definitely you want to just flood the market with your name. And versus a guy that is maybe making 15 cold calls a day or whatever. Um,
Yeah.
I would agree with you. If your sales budget is limited, in a smaller MSP, you're definitely doing better to just cast a wide net and get your name out there and get a cool catch line, or maybe get, a viral post going or something like that. I don't know, I'm kind of old school, so I don't know all about this TikTok stuff and Instagram and all of that good stuff, but
You
certainly,
can teach you.
like those, yeah, I mean, certainly I think that's a better, getting somebody that's proficient at those things is probably a better use of your money as a smaller MSP than when you're growing. for sure.
Excellent.
All right. So let's jump back into the other thing that I really want to talk about for a little bit, and that is what are determining our service gross margin. So most MSPs that I speak to have a service desk. Okay, so and they've got 2 or 3 level 1 guys there, maybe a level 2 guy there. They're closing tickets there on and so forth. So a lot of MSPs are like, my service gross margin. How do I look at that? How do I measure that? So I'm just giving you here a very elementary, again, Thursday afternoon. We don't want to do a lot of math here, but there is an important distinction here when you're looking at your service gross margin. And that is that you only want to take into account your MRR. So you don't want any non-recurring revenue. You don't want any projects or anything like that sneaking into this number. You just want, and you also want to back out your Microsoft licensing or any licensing that you're selling as part of the MRR. You just want to get a clean, what are my clients paying me to handle their tickets? And this is kind of a hard number for some MSPs to arrive at, because what they're doing is they're saying, okay, Mr. Consumer, I'm going to charge you $185 a seat to do your work. And that seat, that 185 comes with a bunch of stuff in it, right? So it comes with email filtering. It comes with maybe a PDF writer. It maybe comes with a security product like Huntress or something like that, So it's important to note that you got to take all of that stuff out. What you want to arrive at is, what is my per seat cost unbundled that doesn't have any of these other things that are, cool gadgets that are cool tools that I'm putting in to my client's environment, so that we can help mitigate, security concerns or anything like that. Your backup should come out of this. Anything that doesn't necessarily pertain to the guys that are sitting on the desk, because what you want to do is you want to bifurcate those costs out, and then you want to track those separately. So you should have a line item that's recurring software MRR, let's say, on your financials, and that's where all of these add-ons that you provide your clients go. And then when you pay for them, you have a corresponding cost of goods sold on your profit and loss that has my recurring software costs. So these are the things. So you can track that margin too. But what's more important is we have to know, are you making money on your service desk? And so the calculation is very easy. Once you've stripped out those things, you get to what your MRR is. In this case, it's $152,000 of MRR. Okay. And we're talking about, this obviously is an incredibly small, MSP if they're only doing $152,000 a year. But bear with me in this example. I tried to make it as straightforward as possible. So now the next thing that you need is to figure out what your service tool costs. So this is a kind of a open to debate item. So the things that I normally see in service tool costs are IT glue. Okay, so everybody uses IT glue to make notes about their client's environment. So your IT glue costs should go in here. My bigger MSPs are putting in all of their license costs. So if you're using, say, Autotask, and you pay per license for a check, that cost should be part of this calculation. I was discussing this again with my group earlier this week, and we talked about, well, what is your remote tool cost? Some of your CRMs come with a remote tool cost, so that's included at the license cost. But if you're using something outside of that for your techs to remote into your clients' computers, that cost needs to go in here. Anything that your techs need to do their job needs to go into this tool cost. And then the final piece of this calculation is your tech salary. Okay. And this salary should be fully weighted, fully loaded in here. You shouldn't have a deduction. If you're paying for health insurance, that needs to go in here. If you're paying matching 401k, that needs to go in here. If you're paying, if you're paying a stipend for your service guy's cell phone, which I don't see, but if you are, that should go in here. Anything, their fully burdened salary needs to go in here. And then you get a total cost, which you can see. You take that away from your MRR and you take this profit, 72,400, you divide it by the 152 and you get your gross service margin of 47.5%. So if you remember from the opening, I said this needs to be over for our best in class companies this is between 48. Taylor Business Group, I know their metric is 48%. Evolve, they like to see this metric at about 52%. I know that there's a lot of peer groups out there in the MSP space, and maybe they have a different, maybe they're talking about W2 multiples on your FTE employees on the desk. Regardless of what metric you're using, you're always going to end up right around, 48 to 52% being best in class. Now, a lot of people are at 40% or less. The crazy thing about this, Steve, is that means that generally only means one thing, and that means is that you're overstaffed on your service desk. That's because you can see that our service tool costs are really marginal compared to the actual salary that you're using to compute this. So that either means you have techs that are not productive on the desk, or you have too many techs on the desk, or your techs have time on their hands. So, and again, some people may be like, Jason, that's really overly simplistic. You're being really callous for an environment where most of our costs are in our personnel. And I would agree with you. I would say, yes, that's absolutely true. But the little secret about running an MSP is that 80% of your costs and your P&L are generally in your people. So if you want to go, if you're not making any money and you're like, I'm not making any money in my MSP, usually the first area and people come to me and are like, I'm not making any money in my MSP. What am I doing wrong? First thing I look at is their employee costs, because they're generally overstaffed. They're either paying somebody too much for where they're sitting, or they have too many people sitting there.
So,
Steve, any thoughts about that?
yeah, I've got what could just be a dumb question. Have you ever ran into an MSP owner who is maybe just a nice guy and he's okay being overstaffed? He's okay that he's got staff with their time on their hands and they're twiddling their thumbs because they don't have enough work to do.
The answer is yes. I see it all the time. I see it all the time. But my response to that is, it's fine. You're a nice guy. That's great. If you're fine with that and you're really not that serious about increasing your bottom line, like, fine. That's great. And I know I get this a lot. Like, oh, you're a finance guy and you're looking at the numbers and you have no empathy toward people.
Mhm.
Again, yes, I am pragmatic. I like to run things by the numbers, and there is exceptions to the norm, obviously. But at the end of the day, if you're a business owner, sometimes you have to take a very hard look at your service desk and say, okay, little Johnny there isn't doing his job at the water cooler, 14 times a day. Then, his ticket numbers are terrible. Maybe, the MSP life isn't for him.
Well, and that's like your opinion, man.
All right. I know I want to be cognizant of our time. So the last thing I'm going to talk about is really your admin budget. So there's a couple of things that, again, I already talked about why it's so important to keep your admin costs under 20. Again, my target optimal MSP runs their admin operating costs at about 15%. And so if you're only charging 25% markup on your products, you've at least got a 10% spread. And the reason why I kind of use that example is because you're you're paying somebody, you're paying a procurement person, and depending on where your procurement person lives on your financials, I hear a lot of argument, well, my procurement person lives up in the sales department. That's fine. Then, then this maybe isn't as applicable to you. But a lot of times your procurement person in your MSP lives in your finance department. And they're usually your AP person, in the smaller MSPs, or, they could even be the controller that you're employing, but they're an admin cost. So you're paying that person to order the product. So if your admin costs are 20% with your procurement person in there, and they're only marking up products 25%, your spread is only 5. So that's kind of where I'm going with this example. So what I want to do is your admin costs need to be 15%. So here's the thing. My last question, am I blowing up my admin costs? Small to medium business owners. Okay. So a lot of small MSPs, the CEO who owns the company kind of uses it as his personal checkbook. So, he goes on a ski trip, that goes through admin. He takes his wife out to dinner, that goes through admin. He goes golfing with his buddy, that goes through admin. Again, I'm not saying this to be derogatory toward any small business owners that are doing this, but it's really blowing up your admin costs when you do this. So, they have something, and we put it in place with a lot of MSPs, and it's called an owner discretionary section. So we actually call it out on the P&L. So we move those costs kind of below the line. So we're actually seeing what our true admin costs are, not what the owner is taking, maybe he's paying for his gas to drive to and from the office every day. And that type of thing, if you didn't own the company, nobody pays you, nobody pays you or reimburses your rank and file employees to drive to and from the office. So you've got to pull that out of your admin costs. So, I'm here giving a little kind of soapbox stand on, if you're a small business owner, you need to create this section of your P&L and pull it out of your admin costs, because you're really hammering the true operations of your business. And at the end of the day, my last thing that I have on here is a practical M&A discussion. We're going to kind of gloss over this, but at the end of the day, if say you're taking your wife out to dinner, once a week, and you talk about business. So, okay, that's a business expense, and you spent $100 on dinner, that ends up in your admin costs. Now, PE, of course, they come in and look at your P&L, and all of a sudden they start talking about add backs, or, add backs, or adding expenses to you. And this is where our small business owners aren't doing themselves any favors, because, if you're looking at I'm not going to get into a huge discussion about multiples, but if you're looking at a 4 to 6 multiple, and you just spent $100 on dinner, and that hits your P&L, you've essentially cost yourself $600 in the future if you're at a 6 multiple. So I really am passionate about getting owner discretionary expenses out of my admin costs, because A, it's crushing the valuations of our companies, and B, it can cost you at, when you sit at the table to sell your business, if you're running all of these kind of costs that you as a business owner are allowed to, the IRS doesn't tell you that you can't run your car through the P&L. In fact, I put my CPA hat on and tell you that you should run your car through the P&L, but you shouldn't run it through your admin costs. And so what I'm trying to disciple my MSP clients to do is get this discretionary section on your balance sheet so that we can see where your true admin costs are. And then when we present a P&L to a prospective person that might be interested in partnering with us or buying our business, we've already pulled out all of the things that they would be looking for, that they might not, spend if they were actually owning your business. So that's kind of the message that I want to convey. And that's kind of to my last point. How do you crush your multiple? Get all your discretionary expenses off your P&L, or at least in a different section of your P&L. And all of a sudden, you're going to get a more favorable look for when people start looking at your financials.
Mm-hmm. No, this is great. Jason, thank you. Before we wrap, I'm going to give you guys the opportunity to pop any questions into the Q&A or into the chat. I know we've had some good discussion in the chat while this has been going on. Jason also has his contact information up, so I know we ran that poll earlier where we asked if anyone would like to chat with either me or someone from our company, Alternative Payments, or if anyone would like to chat with Jason or someone from his company. But if you did not answer that poll and you would like to be contacted, feel free to just drop something in the chat. Yeah.
And Steve, I'm actually putting my personal cell phone up here. Please don't spam me. But yeah, I definitely feel it's very important for my clients or prospective clients to have, my personal cell phone, and any questions that I can answer for them. Sometimes it's easier to just text me and get a hold of me. I may respond, like, just email me, because then my assistant can take care of what setting up a meeting or anything like that. But if you just have like a quick question and you're like, this is really bugging me, Jason said this, and I'd like to clarify, you can certainly send me a text and I'll be happy to reach out to you.
Excellent. I see Riley has a question here. Thoughts on billing for procurement versus marking up the product? Does that question make sense?
Yeah, absolutely. So what basically what you would do is you're going to just basically give your clients the product at cost, and then you're going to bill them 4 hours of procurement time. I'm assuming that's what Riley is asking.
It could be that, or simply, all right, I'll put a 3% margin on the product because I should mark it up, but I don't feel like I can get 25 or 30%. So I'll just charge this guy a couple hours of time for procurement.
Listen, I don't care how you get the margin into your product. If that makes your clients feel better about themselves, that they're paying for a service, then absolutely, I would do it. I mean, Steve, I'm big on like analogies. So that for this, I think about like when you go into get your car repaired. And I don't know if they do this anymore because I haven't visited a mechanic's office in years. But I remember when you used to go in there and you would pay like $20 for your oil filter and, $15 for the oil and then whatever. And then there was a sign hanging on the door that said, our mechanics are $120 an hour. And it's by the Chilton manual. Remember that big Bible that they would pull out and say, okay, it should take my mechanic like 2 hours to change your oil. So it's like $250 for the mechanic's time. Meanwhile, they're paying, Joe Smith, $22 an hour and charging you $120. So absolutely, I love it. And And I've actually told my salespeople that before in my capacity at CFO. I would be like, listen, don't mark the product up, but charge them like 6 hours to install it at, our 150 an hour rate. They can argue with the price because they're going to go on Amazon and spec out what you bought for them, but they can't argue with what you have to pay your technicians to come set up the server because they don't know what you're paying them.
Hmm. Absolutely. Well, good. Jason, thank you so much for coming on here and doing this with us. And for those of you that are here watching, thank you as well. We have our next office hours on March 3rd, and that is going to be with Rayanne Buccianico from ABC Solutions, also in Florida. So, Jason, you may know her, running in the same circles. Um, and I'm sorry, I don't remember the topic, but it is going to be finance and accounting related. So I hope to see you all there at the next office hours event. These are going to continue to be free. Doesn't matter if you're an alternative payments customer or not. We've got some big things we plan on doing for the community this year, and I can't wait to share more with you guys about that. And I will see you all at the next session. Thank you again, Jason. Take care.
Thank you, Steve. Thank you, everybody.